614 Startups Nation, welcome to a very, very, very special episode of the 614 Startups podcast. This is a gathering of the minds that we need in the room to discuss this particular subject. We're going to be talking today about PPP and the Biden administration's changes that are actually meant to increase participation for employers with 20 employees or less. And I have my very distinguished panel today, Mr. Henry Golatt, AKA the man on the street, the man working for the little guy with the city of Columbus, and my girl, Janeen Smith-Hughes, who I have known since high school. We've talked about getting her on the podcast, and you try to find the perfect opportunity where somebody's expertise will align with the community's need, and I think we found it right here. She is a CPA, and she's going to be digging into what this means when it comes to the PPP on the accounting side and tax implications. So buckle up. We're going to go for about 30 minutes. But at the end of this, we want you to be educated. But most of all, we want you to be able to go out and take action if this is the right program for you. So Henry, I'm going to throw it over to you to start. Let's start with the basics. What is PPP?
So thank you, first of all, for having me and for your being such a vital force in the small business community and sharing this important message. The PPP, as it's known on the street, is actually an acronym for the Paycheck Protection Program, or the Payroll Protection. I think a lot of people say, but it's Paycheck. Some people say Payroll Protection Program. The PPP program was initiated or launched in 2020 as a direct result of the pandemic. The intention behind the program was to try to stabilize the economy and keep it from sliding downhill by allowing for employers to be able to gain quick access to funding from this program that is actually administered by the U.S. Small Business Administration.
Okay, wonderful. Now, when the PPP rolled out, it was a program that was put together very quickly. We know round one rolled out and all we got was the controversial stuff, right? Oh, X company applied and got a loan for $10 million. X company who I don't think this program was really structured for them, they were able to gain access to the program. So I think the way round one went either didn't attract maybe kind of the core audience that PPP was meant for, or it turned off people who it wasn't intended to turn off, or because of the rollout schedule, enough education wasn't done. And so people were operating mostly on fear, right? If I apply for this, will I get approved? If I apply for this, will I have to pay it back? I don't have a path to paying it back because of so much uncertainty with COVID. So let's talk about the context of round one and maybe what we're trying to do differently with this program in round two.
So real quick, you hit on some good points. It did not get probably vetted correctly in terms of rollout. But, by and large, what we saw and what we continued to see throughout that first round and even into the second round was that it was structured to really assist small businesses, with the idea that most of the larger businesses were already, capable of gaining access to funding. They had adequate cash flow. They had, business models that would, kind of suffice to be able to gain access to funding. But the smaller guys did not have that. What we quickly found was that system of relationship really was paying off, because most of the big guys, jumped to the trough real quick, and it morphed into a program that, you heard tell of, companies like a Shake Shack or others like that who really had cash flow. And not only did they have cash flow, they had cash within their institutions to withstand some level of pressure brought about by the pandemic. So a lot of the guys, the smaller guys, the people that we represent, the mom and pops were applying, but just wasn't getting access. They just did not get access. The other piece was a lot of the banking institutions were favoring, to be honest with you, relationships that they already had with pre-existing borrowers who were of a bigger scale and bigger nature. So, those were the caveats around. Not only was it around awareness, but also it was some implications around relationships and who was actually coming and the waters being parted so that they can get access to the funding. So that was what you saw in the first round. The second round, what we see, what we are talking about here today was some changes that we worked to propose around how to make that process more equitable. The idea behind PPP was that you gain access to funding. It's a program that's administered by the Small Business Administration, SBA. SBA would work with banks to get the money out. And again, that goes back to that relationship capital. The banks would then make those loans to the borrowers. The loans could be forgiven, and you typically could get, I think, somewhere in the neighborhood around 2.5% of the actual gross of your company's gross income. And so when you look at it from that level, a lot of the two times, let me repeat that. Basically, you could get 2.5 times the applicant average monthly payroll cost. And so it really could be quite substantial, but the idea was to help to stabilize the economy, and particularly to make sure that there wasn't, this off the cliff kind of an effect of people being not able to go to work and businesses shutting down and those kinds of things like that. So it was a stabilizing program meant to help to make the small business world easier to navigate, but also the broader economy.
Yeah, and what I heard from that is, this program was developed, it was designed to help a certain cohort attract certain type of applications. But because of the way it was maybe rolled out, what ended up happening was that population didn't maybe receive all the funding that was intended to go to them. So we get a second chance, right? Because of the pandemic is ongoing. And so there's a second round. And even more importantly, what we're here to discuss is this new change. Because maybe there was such a miss initially that there needed to be a change, right? And so I know this is also a timed change. This is not a permanent change. This is something that you have a limited time to really access. So let's talk about, what this new rule is, right? And why it matters. And then what time frame does a small business have to really take advantage of this new rule?
So the new rules, and let me just say one more thing about the intentionality of the program. This is actually one of very few chances we will ever see in our lifetime to right the ship, if you will. And that's why, we have put so much energy, into getting the word out and working with nationally to really bring attention to some of the flaws of the first two rounds and, what needed to change. When they did it, came back and even made improvements, on the second level. They included more CDFIs, community development finance institutions, which by design were intended to reach out further into underserved neighborhoods and communities and things like that, providing access to capital. So in this round, again, that is very vital. You have to note it. If you ever want to think about the opportunity to level the playing field, these loans were capable of being forgiven. So basically, it's a cash infusion into Black and brown businesses, if you want to know the truth about it. That's why it was so important that we, talk about this and raise the bar and lift this up in such a way so that we didn't miss out on that opportunity, guys. It just really was static vital. So some of the things that are happening, you talk about the time frame. Starting today, you got a 2-week window to if you're a minority business, if you're a business that has 20 fewer employees, you're now capable of looking at that. What we also did was looked at how you evaluate those businesses. So I'll read it off. I want to make sure that we get this out and get the word out clearly. What are the fixes? And so it creates a 2-week window starting February 24th, during which only businesses with fewer than 20 employees can apply, to prioritize this support to businesses that were previously left out of the loop. You couldn't get access, so we got to get them to know that now you can come. It's made available for you because so many people gave up and got denied. It also expands eligibility for immigrant entrepreneurs. Okay, they were left out of that loop as well. And then it expands equitable funding for sole proprietors. What we find in our community oftentimes is, we just don't grow and scale at the same way and same rate as non-minority owned businesses because of access to capital for one reason, but we just don't scale. What I mean by that, we don't add employees, we don't add another store, we don't do all of those things because we don't have access to capital. So this kind of fixes that in a way. So it basically allows sole proprietors, a lot of people who are consultants, like I function sometimes in that role. You don't have employees, especially if you're doing management consulting type of work. You just maybe one or two people that come together to do a project. So that is made available through this fix. Independent contractors and self-employed Americans, of which 70% are women or people of color. So these are things that have been modified in this process. And we can drill down even further. If you had student debt before and delinquencies on student debt, weren't allowed to be a part of this, but now you are. If you had previous convictions or you had involvement with the criminal justice system, that eliminated some people. That's a piece of SBA's asking in their standardized processes. Do you have a conviction? Those kinds of things like that. All those are things that leave and marginalize our communities in great rates. And so those are things that have been fixed. One of the major things was the link between the borrower's amount as shown on their income tax. So now we're dealing with it links borrowers amount of the gross income on Schedule C and line C of the Schedule C. That is important. That was a change that we thought needed to be made. This change will meaningfully increase the amount of PPP. So now you're not getting, I had some businesses that got very small amount. They managed to get through the process, but they got very small amounts of money. But this allows that amount to be increased significantly as well. So those are the changes that, other things that are there, but certainly these are the things we wanted to lift up with your audience.
Yeah, and full disclosure, I reached out to some bankers to be part of this conversation because I understand kind of the advocacy piece, the policy side, and that's what you represent, Henry. And Janeen, you represent the accounting, the small business, getting your documentation right to apply. I wanted to have representation for the folks who are actually managing those applications. Unfortunately, this conversation came up on very short notice. I couldn't get a banker in the room, but let's talk about the small business owner who's heard what Henry has said. Say, I didn't participate in the first round, or I tried to participate in the first round and I was denied for any number of reasons, right? Sole proprietor, or I had a criminal background, or I had all these barriers that are now eliminated. Let me give it another try. Or for the people who were intimidated by the process initially, I want to go to you about getting ready to apply and the required documentation. Why don't you dive into that?
Sure. Thanks, Elio. So I worked with clients during the first round, and the clients for whom it was easy to apply were the clients who already had systems and documents in order. So if that is you, if you already have accounting system, you already have your numbers ready, if you're running payroll and you already have those payroll documents, this will be easy. You'll go to your bank, you'll upload some documents and get through the process. However, I know for a lot of us, that is not the case. So when you get ready to apply, here's what you need to know. Number one, you need to have been in existence before the pandemic started. So you need to be able to prove to a bank that you are in existence. The rule is February 15th, 2020 or earlier. That's the first thing. The second thing is you have to have one of two things. Either you have to have payroll. So as a nonprofit or a corporation or a partnership or something like that, you have to have some payroll, or you have to be a Schedule C sole proprietor with revenue. So if you don't have any revenue, you don't have any income from your clients, you won't qualify at all. So those are the two basic qualifications. They got rid of the elimination for if you had student loan debt, federal student loan debt in default. It is okay if you have an ITIN and not a social security number, you are eligible to apply. That is fine. And they also got rid of, as Henry was saying, all of the requirements that eliminated people who had been affected by the criminal justice system, who have felony convictions. So that's what you need to know. So that's most of the businesses I work with. On the first round, not everybody was eligible, but on this round, almost everybody that I work with is eligible. So that's the first thing. Even if you got a loan the first time, you can still go back and get a loan the second time. So as long as you still have the ability to generate business and pay people, because forgiveness is based on payroll, sort of no matter what your situation is, forgiveness is based on the ability to pay somebody, you should apply. So that's basically all of you. Please apply. So here's what I want you to go pull. Number one, go pull your 2019 business taxes if you have that, whatever it is. If you have a 990 or a Schedule C or a 1065, whatever you have, you got 1099s, whatever it was for 2019, pull it in a PDF because you're going to have to upload it to a portal. Okay. Next, if you run payroll, go grab all of your 941s and your quarterly, they're called SUTA, S-U-T-A, out of your payroll system. It should be very, very easy to find. A lot of times when you log into your online payroll system, there's like a button that says run my PPP reports. Do that, download that. Again, in PDF because you're going to have to upload it to a portal. Then find your banker. Okay, this is the reason that a lot of us missed out on the short timeline last time. So if you have a business bank account, which you better have a business bank account, go to the bank where your business currently banks, wherever you have your business bank account or your business credit card. If that does not work for you and you're in Ohio, go to ECDI. They're lending now. They're doing first rounds only, not second rounds. But if you got a first round, you already got a bank, so you're fine. You can go to ECDI or some other community development and financial institution. They will help you. You're going to have to put everything in a portal. They're going to look at it. They're going to come back to you. They're going to say, Elio, we need something like evidence that you were in existence on February 15, 2020, or we need some other document. Okay. That's going to go back and forth, back and forth, back and forth. And then once they got all the boxes checked, T's crossed, I's dotted, they're going to send that to the SBA. And the SBA is going to go most of the time, cool, cool, cool. And then you're going to get your money. Okay. So that's what you need. Pull your 2019 tax documents. If you have payroll, pull all 8 quarters, 941s and SUTAs for 2019 and 2020. They're going to ask for some combination of those things. You need to get it. If you don't have 2019 documents because you were not in existence, but you started that business in that very early window of 2020 before the pandemic, you need to get your tax person to complete your taxes ASAP. Okay. Don't mess around. Get your stuff, get your taxes, get them completed, because that's the only thing that you're going to have to qualify you. If you are a Schedule C and you started your business on Martin Luther King Day in the year of 2020, and you had $10,000 or $50,000 worth of revenue last year, and you have all your receipts in a box, you better put that stuff in a spreadsheet over the weekend and get it to your tax preparer, okay? So that they can put that together for you. Because if you have to wait until they can compile and then prepare a tax return, you're going to be nearing the end of the 2-week window. So I keep telling my clients, stay ready so you don't have to get ready. And having your accounting records in place is hugely important.
Listen, with Henry advocating policy side and Janeen handling your finances, you shouldn't have any problems. But maybe a few folks who might be listening to this are saying, I'm already disqualifying myself. It is this feeling like if I don't have it today, I just won't go through with it. So Janeen, to your point about getting folks who are not ready, because
yes,
for the folks who are ready, it's going to be easier.
Correct.
I don't want anybody to tune out now after you gave that list and say, I don't have that, I don't have that, I don't have that, I don't have that, I'm not going to do this. Let's say there was somebody who was determined to participate, because one of the things I was thinking about is we don't have a real way of measuring economic impact unless all these folks put their information in the system. We made this big push around getting people to give us their census data. Give us your census data. It really matters. Well, all economists are doing right now is guesstimating economic impact. But now that it's open to sole proprietors and people with less than 20 employees, even if you don't get approved, just like you understood the importance of being counted, the government also needs to know what the economic impact was, and having this documentation is tangible. So let's help our folks, no matter what situation they're in right now. If somebody was to come to you or go to another professional, how quickly with the right documentation can you get them ready to apply? doing
It'll
their taxes, getting the numbers together, pulling their bank records, trying to get as many people ready to apply as possible?
it takes a few days because there's a bunch of steps, right? So, in order to do business taxes, we have to develop how much income do you have, how much revenue from your customers, and what are the costs that you paid out in order to generate that revenue. So that means you need to tell me every dollar that came into the business and every dollar that went out of the business during the year 2020. So for some people, that's easy. We go online, we download that out of their bank account, and I tell them, this is your spreadsheet. You go through categorize. I give them major categories based on the tax forms. They go through categorize. I make a pivot table because I like pivot tables, and we have the numbers, right? For other people, they've got maybe a bunch of bank accounts, or they've got receipts for things that they paid cash for, that they paid personally. And so now it's like, well, now you have to get that box of stuff and you need to add up all these numbers again in these major categories for the tax form in order for me to put it together. That is a lot of work. If you don't have that done, you are going to have to put in the labor to get the numbers to go into the tax form. There is no magic to that. The more electronic it is, so if you use your business debit card, business credit cards, and we can tell, hey, I went to Staples, I purchased my goods from my major vendor, whatever it is, the more electronic we have it, the better we can do. It is hard if things are paid for in cash and we got crumpled up receipts in a box. Not impossible, but doable. So depending on what state those things are in, um, determines how long that takes. Once that data is to a tax preparer, it is not difficult, 24, 48 hours, to get an accurate tax return completed and ready to be filed. It does not have to be filed in order for you to apply for the PPP, but most tax preparers are going to prepare you something that is fileable. And so you might as well go ahead and get it done. We're already in February. Everybody's got all of their stuff. And so you might as well go ahead and get it done. Me as a tax preparer, that's what I prefer. If somebody's coming to me now going, I need a Schedule C for PPP, I am going, okay, that's 80% of the labor to do a tax return. So let's just get the whole thing done.
Mhm.
If you wanted to venture into accounting software, and you feel like I'm pretty tech savvy, I could go in and do this myself, you can hop into Wave or Xero or QuickBooks and build that P&L yourself. And then if you're a person who normally does their own taxes, you could do it that way. I do have some clients who are fairly tech savvy and can handle that piece of it. Um, but you don't have to. That's definitely not a requirement for doing this piece. As a matter of fact, they don't want your QuickBooks or Xero financial statements. They want forms that you are going to submit to the government because everybody's financial statements look a little bit different.
Yeah.
So is that helpful, Elio?
It's very helpful. It's a couple of days, guys. If you're an entrepreneur, this is one of those propositions that is zero risk, actually. If you take a
True.
couple of days, you're not going to be any worse for the wear than you are today. Why don't you just do the work and apply and let it go through the system?
Yep.
Where you are today versus where you are if you apply and approved is so dramatically different. It's worth the time and the effort. It absolutely is. And if for no other reason than to provide the government the data it actually needs to consider other forms of stimulus, right? Because if this program is not ideal, and a lot of people who apply for it show real loss, but yet did not receive funding under PPP, the government is now incented to think about ways that they can still solve that problem, because the fact that they don't approve you doesn't eliminate the problem, right? For every person who is a sole proprietor that can support themselves is one less person that the government now needs to provide some form of subsidy to. So they are also incented to get money out to as many businesses as possible and keep those businesses going. Now, Henry, I'm going to come right back to you, but I want Janeen on one more thing. For those sole proprietors out there who are paying themselves via distribution,
Yes.
they're taking a distribution, they aren't showing themselves as a waged employee. What advice do you have for them?
Yeah, so that is an appropriate tax status for a lot of business, right? So being a Schedule C sole proprietor is a really good tax status for a bunch of people. I mean, it is the best tax status for the majority of people. So that is fine. You are allowed to do that. There's no reason that you have to put yourself on payroll. Now, when it comes to PPP, um, the most important thing is having those records. So some sole proprietors just aren't looking at their income and expenses but maybe once a year when it comes time to do taxes. And so you have to be able to put together, because now a Schedule C sole proprietor with no payroll, your PPP loan amount is going to be based on your income. So you need to be able to know that number. So if you're Henry and you have a consulting firm, you have like invoices, right? Because you probably did some work and then sent somebody a bill. So you've got some invoices. But if you have like an online clothing store or hair store or something like that, you may not have as quick of a report to go through, right? So you might have, maybe you redid your website, now you've got a different sales system. And so you might have to go back and pull 3 or 4 reports for us to get that revenue number. But that revenue number is the key. I'm thinking about my hairstylists and my barbers, right? How many hairstylists and barbers can go in 2020? I did this many dollars worth of hair off the top of their head. They probably can't. So now you've got to go back to your booking system or your schedule, or maybe even to your bank statements to look at how much money did I take in over the course of the year. So that can be a challenge, but it's what you need to do if you are a barber, beautician, you have a small online store, anything like that. You need to go back and be able to get those records. So that's the first part of legwork that you need to put in if you don't have employees.
All right, great. Now, Henry, I want to go back to you so you could comment, piggyback on anything that Janeen has said, and then we're going to transition to some other questions for you.
Yeah. One thing certainly, I love the saying, "Get ready, stay ready, so you don't have to get ready." I mean, that's the whole. And I'll do a shameless plug. That some of the work we've been doing is around building out this network ecosystem, whatever you want to call it, that allows our businesses to do the work, the hard work of being in business. And so I certainly want to emphasize the need for that, but also talk about the fact that Janeen certainly is really, really, I'm very happy to meet you. You're really a breath of fresh air as it relates to the accounting side. But there are others out there that, like you said, there's a network of organizations, ECDI certainly, from the banking and the TA side. There the SBDC, Small Business Development Center, and others who could perhaps help in this process. SBDC is a part of SBA, so certainly they are in tune with what needs to be done, and we work hand in hand with them in our ecosystem work. They're one of our preferred network providers. The other thing I'll say to this audience, to your audience, is that this is a 2-week window that has been made available or prioritizing businesses that we talk about, the underrepresented, under-resourced businesses. But that time frame actually, certainly to apply, goes beyond the 2 weeks. The 2 weeks is just giving you priority treatment.
All right, so we're going to wrap this thing up with a bow in about 5 minutes. Let's talk about one of those big fears, which is forgiveness and eligibility for forgiveness, and then tax implications. So Janine, if you want to take that, that'd be great. And we're going to wrap it up in about 5 minutes.
Okay, forgiveness. The easiest way to get the most dollars forgiven is to pay them to your employees. So if you have employees today, take your PPP money every time you run payroll, use it. Okay. You've got 24 weeks to spend that money on payroll. And remember, they calculated it based off of 2.5 months of payroll. So that's 10 weeks of payroll, but you have 24 weeks to spend it. So if you have employees, that is the easiest way to get your forgiveness. If you don't have employees because you're a Schedule C or a partnership or something like that, then you need to show basically that you paid the owner through distribution, typically, that amount of money, right? So basically, you need to show that you use that money to stay in business and generate more money. What you can't use it to do is something like refinance debt or buy a vehicle or anything like that. You need to use it to pay yourself or other people. So when you're submitting documents for forgiveness, it's basically the same documents that you used in order to qualify. So you're going to submit 941s and SUTA documents. You are going to submit a Schedule C. So typically my clients that are doing forgiveness for their first rounds now are submitting their 2020 Schedule C in order to get forgiveness for the amount that they were given during 2020. And I anticipate it looking similar for the next round of forgiveness. So that's it. Pay people. That is the point of the money. Pay people. 60% of the money. So if you get $10,000, you need to spend $6,000 paying people and $4,000 on other allowable costs, which is things like rent, utilities, interest on your business debt, required PPP. So if you have people, but you need to protect them, say you've got a restaurant or a store or something like that, and you have to buy masks or hand sanitizer or them plastic desk thingies that are everywhere, all of that counts in your forgiveness loan amount. Tax implications. Thankfully, Congress in December made PPP forgiveness tax neutral, right? So in other circumstances, when a loan gets forgiven, that it's taxable income to you. That's not the case for PPP. So you're not going to have to pay any extra taxes on that loan forgiveness. And loan proceeds, when you get a loan, that's never a taxable event. So you don't have to worry about that. Now, expenses that are paid with PPP are also still tax deductible. Normally, the IRS does not do this for us. They say you get one of two things. Either you get the free money or you get to deduct the expenses. In this case, we get to do both. So the expenses will look as normal. You and your tax preparer have a decision to make, which is, do we show the forgiveness on the 2020 return? Which if you're getting a new PPP loan today, that's not going to happen. But if you had one for last time, you and your tax preparer get to decide, do we show the forgiveness because we know what's going to happen on the 2020 return? Yes or no. That's a decision that you have to make, but it should not result in any additional taxable income if you qualify to get your full loan forgiven. If for some reason you do not, then you and your tax preparer need to work out what is that additional tax burden based on the fact that I didn't spend the money the way that I was supposed to spend it. If you spend it paying people and the way that it's required to be spent, you'll be fine. There should not be any other taxable event around PPP.
All right, so I'm going to
I have a quick question, if I can, for your audience.
Okay, we got 2 minutes.
What happens if you got a side hustle? You actually got your 1099, your W-2, and you got this side hustle. Talk to the audience a little bit about that, because a lot of people fall there.
Sure. So say I'm Henry and I have a job and I have a consulting firm, right? The consulting firm, say it has a profit of $40,000. That's ordinary income. You're going to pay taxes on that anyway. In 2021, say you get a $10,000 PPP loan and you spend it making a hire. So now you've got this money, and so you're going to expand your business by hiring maybe a marketing person. Okay. If I spend that through payroll, that's going to be forgiven, and it's not going to count towards any additional taxable income for me.
Okay, great. Thank you, Henry. Thank you, Janeen. Listen, when this video goes out, we're going to try to put this video out tomorrow. I know we're going to have insane interest and questions. Would you guys be open to coming back for a second conversation based on that feedback? I know we only have 2 weeks, but I think we may have opened up Pandora's box here, and we can't leave people hanging, right? They might need more information. Would you guys be willing to come back and do this again and maybe answer questions from the community?
Absolutely.
Certainly.
All right, perfect. So stay by your LinkedIn inboxes, because you know I'm in there. I might slide in there and ask for you guys to come back. Now I have your emails. I can do that. Now, real quick, for policy questions or city government questions, Henry, how do people get a hold of you?
The best way is Golatt at columbus.gov.
All right. And Janeen, people are freaking out right now, grabbing pieces of paper in the boxes, and they want to get it over to you. How do they get a hold of you?
My website is simplicityaccounting.co. That's simplicityaccounting.co. There's a contact me page there. You cannot upload your documents there. Don't try. But if you fill out your name and the name of your business and your phone number, it sends me a little nice love note email, and I will call you. We can schedule time to go over things. I'm also on LinkedIn, and the business is on Facebook.
Awesome, man. You guys, you definitely did your audition for a co-hosting gig over here at 614 Startups. I would love to have you guys back on and maybe make this thing a regular conversation. All right, 614 Startups Nation, thank you so much for tuning in. Hopefully you found this valuable, but most of all, take action. Until next time, peace.